As expected, equities sell off a little bit. What's up, everybody? Welcome aboard. It's Bubba's Daily Update, and I don't think it was any major surprise today. Markets were down about 90 or so. They did push down to about 200, and I guess the real question is this the start of the next down leg, or just is a pullback in a market that wants to go higher? I would look at it from this perspective. Unless we can break below 24.5, I think this is just a pullback. If you've noticed today, the market's bounced off at 24.550 and came back, and if you saw late in the day, there was a late run that was a pretty powerful rally. It failed, but it did not, we only lost half back. So again, it wasn't like a major crippling sell-off. Volatility didn't spike. It was higher, but it didn't spike. So there was not a lot to really take away from today's action. It came down to where it should have. It bounced exactly. So we're not like saying, hey, we still believe the overall top is in the market, which was made on January 29th, but we're not saying that we will not get a little bit more of a rally here. I think you have to watch. I think this is what we've been talking about the last couple of days, is you want to observe here and look for opportunity within this range. So unless we break below 24.5, I certainly don't think that we're going much lower yet. I still believe before year's out, we will take out those lows we put in. But for now, I think that we may see a little bit of a run upwards before we start heading lower again. Again, volatility was okay. It wasn't real. There wasn't a lot of fear in the selling. I think the big story from today is the 10-year is back to 2.92, which the last time was here in mid-February. If it does break out over 3, that will change our thinking. Okay, the bonds are under a lot of pressure in general, the notes and the bonds. And of course, we think the 30 is going down to about that 140 level, trading at about 144 right now. So there are a lot of reasons to believe things could happen, but we're not going to assume they will happen until they actually do. So we want to watch the footprint of the market and see what's going on here. Oil was interesting. I think we would call today's action in oil a key reversal day. Made new highs, closed near the lows. So that looks like a key reversal. We may have seen the final run, but of course there's a lot of manipulation from OPEC going on here and Saudi Arabia and the Aramco deal. But I think oil did come down. The dollar was lower and ended up rallying. Again, we're looking for a 91 breakout in the dollar, and that would tie into a lot of the other things that I think would push the markets lower. But again, we're not going to fight and say that this is it. We have to watch 24.5 in the Dow. But look at just the different things happen. Gold had a late rally after being down about 10 bucks, came back to only down about 4. Silver is still much stronger than gold, and that ratio has come down from 83 times down to 77. So again, we still like the silver, buy silver, sell gold ratio spread. In the meantime, the grain markets were moderate. Wheat was a little bit higher. Soybeans were under a little pressure. Corn a little bit lower. Nothing really to worry about. The meats were under pressure. Now, I was a little surprised when in fat cattle or live cattle that was as heavy as it was, but no surprise in feeders. I think we expected that, and I think we're getting close to areas that we want to buy in hogs. It looks to be a buy on support levels. The Bitcoin, again, we think that it has made a bottom, and it had a nice little solid small rally, which we don't want to see big rallies. In markets, you don't want to see these gigantic moves. You want to see trending moves that continue to build upon momentum. So that looks pretty good. And again, we look at the overall picture. The markets are right in this little range here that could really go either way. But right now, we would lean to being buying a dip until we can break below. So as we look at the bigger picture, the markets will probably tell us a lot tomorrow. It is a regular options expiration tomorrow. So I think we'll see a lot, but there is a lot of weakness out there. And of course, you had some big earnings from Alcoa, which sold off most of the day, but was higher. So again, it's not like it's still up 20% from the bottom. American Express was strong, showing you how much debt's in the system. But we'll kind of see how it plays out. Let's not get too aggressive. This is more of a time for observation. In the meantime, we will talk to you over the weekend and give you a better view, as we'll be back with Bubba's Bottom Line over the weekend. And of course, we'll be back on Monday with Bubba's Daily Update. In the meantime, don't forget about our high school program. If you'd like to help out, go to Patreon, patreon.com/Bubba Trading. And don't forget the Bubba Show every day from 4 to 5 Eastern. And on Tuesday, next Tuesday, we're going to have on the author of Fed Up, my friend, Danielle DiMartino Booth. Okay, she's going to spend the day with me, and we're going to talk about the Fed, one of my favorite topics. So make sure you catch every day's Bubba Show, but especially catch Tuesday with Danielle DiMartino Booth, the author of Fed Up. Have a great day, everybody. Have a great weekend, and we'll see you back here over the weekend for Bubba's Bottom Line and next Monday for Bubba's Daily Update. Thanks, everybody. Have a great weekend. We'll see you later.